The US and Iran just announced a ceasefire. Oil dropped, stock bounced, and a lot of people are asking, should I sell my gold now? Short answer, I don't think so, because the best is yet to come. Here are 3 reasons why. Number 1, gold's resilience through the war. Before the war, gold was already moving higher. Then in March, it pulled back and a lot of people panicked. But here's what actually happened. Gold's drop was driven by forced selling and liquidity stress. Think about it this way. The Gulf countries and Turkey had to liquidate gold to cover losses and stabilize their currency. It wasn't a change in gold's long-term outlook. It was a sign of how valuable and liquid gold is during crisis. Look, these countries sold gold because it is the most liquid and most trusted asset they had. So the drop wasn't about gold being weak. It was about gold being so valuable that countries in crisis sold it to survive. Think about that. But since March 26, gold has been up nearly 8%. And this ceasefire didn't send gold crashing. And that tells you something. And here are what banks are saying right now. UBS, don't abandon your hedge. They're reiterating their target between 5,900 and 6,200. Wells Fargo, raising their 2026 gold target, citing the need to hedge against accelerating policy surprises. Goldman Sachs, they're maintaining their forecast of 5,400 by end of 2026, driven by expected Fed rate cuts and continued central bank purchases. Look, 3 of the biggest banks in the world are telling you the same thing. Gold is not done. This isn't my opinion. This is institutional consensus. Number 2, let's talk about the economy. The economy's flashing red signals. Jamie Dimon, the CEO of JP Chase, just warned that rising oil prices could trigger a recession and a bear market in 2026. Let's look at the numbers. Inflation came in hot for March with 0.9% higher month over month, pushing the annual rate to 3.3%. Folks, that's not cooling. That's re-accelerating. And let's not forget, the Federal Reserve targets is 2%. Well, I guess they just blew past that by 50%. And by the way, inflation is not a chapter. Inflation is a book, and we're in chapter 5 since COVID eras. So do anticipate higher inflation. Let's talk about the consumer confidence. Consumer confidence for month of April hit record low. The University of Michigan index plunged to 47.6 in April, down 10.9%. Fear over rising energy prices and broader impact of the Iran conflict. Let's talk about the GDP. The estimate for the first quarter is 1.35%. That number could very well be revised down. No surprises there. But it's important to note that when the GDP drops from 4.4% in the third quarter to 0.5% in the fourth quarter, that's not a soft landing. That's a stall. And whenever you have a stall in the economy, you got to have something in your portfolio that resists that. As if the economic numbers are not enough, the latest TREP, which is the industry's largest commercially available database of securitized mortgages, reported that March saw a surge in delinquency rate, which jumped to 7.55%. This is the highest in years, which is led by surge in lodging and ballooning rate, a category which until now was not a source of concern. Folks, as a former banker, when a bank starts having a high default rate, guess what? They're going to tighten the belt. It's going to impact both their balance sheet and their income statement. In other words, delinquencies are increasing because the borrowers are not able to make a payment. Do you think that's a good sign or a bad sign? And last but not least, oil prices are still elevated. Energy importers are still under a lot of pressure. The supply chain damage that occurred is real and it's lasting. Even if tensions cool, the economic shock will persist. So globally, the dollar is leaking. And domestically, your purchasing power is eroding. That's a squeeze from both sides. The third point is the petrodollar system. The petrodollar is cracking. The deeper issue isn't Iran, is that the entire Pax Americana framework is cracking. I'm talking about the petrodollar. The US is no longer seen as the reliable guarantor of global stability. And that's not a short-term trade. That's a generational shift. It used to be that the BRICS nation, Brazil, Russia, India, China, South Africa, they were charging away from the dollar. But now we could very well see that Middle Eastern countries are starting to diversify away from the recycled petrodollars into treasuries. As a matter of fact, Iran was asking for the Hormuz tolls to be paid in either yuan or Bitcoin. The point is, not in dollars. See, the way I see it is this. You have a slow leak that is now becoming common knowledge. And therefore, it could become a self-reinforcing. In other words, other countries could accelerate the de-dollarization movement. Here's the big picture. The dollar share of the global trade has fallen to around 40%. Cross-border dollar lending has slipped. This is the kind of slow structural decline that the sterling went through over decades. It wasn't overnight, but it was steady and irreversible. Globally, the leak away from the dollar is accelerating. And domestically, with inflation rising and growth slowing, policymakers, the Fed, have no choice but to add liquidity, which supports real assets like gold. What am I talking about? I'm talking about printing. Get ready for the print machine. It's actually being warmed up right now. And as soon as we have the next crisis, well, guess what? They're going to print, and whoever's the closest would benefit. But the big benefactor will be gold. See, gold's role is strengthening. As a financial stress builds, gold is re-emerging as a trusted store of value and a global monetary anchor. This isn't speculation. This is where the data points. This is where the institutions are moving. Don't let ceasefire headline comfort you into complacency. The forces driving gold higher are structural, not temporary. If you want to understand what this means for your portfolio, your retirement account, your savings, your financial future, book a free consultation. No pressure, no obligation, just clarity. I'm Alex Ebkarian, co-founder of Allegiance Gold. Subscribe, like, share, and tell us what you want to hear, because we're going to keep bringing you the proof about gold.